folks, Dan Frio here, the mortgage update, and the stock market just closed at a record high. Record high. Wow, that's crazy. So I'm going to go over, if you follow my videos, you see I'm trying my best to post every day to kind of let you guys know what's going on in the market. The channel and a lot of this information is basically for anybody looking to buy a house, realtors, financial planners, people in the mortgage business, all those things. So I hope, don't forget, give me a thumbs up, subscribe to the channel, and leave me a comment if there's any other information that you would be interested in me posting. So let's get to it. What happened today? Well, a few things. As you see, as this ticker goes by, you're going to see the market just hit a record. And this right here just hit a record close. The S&P was up. Bonds are flat. So what's going on? What's really going on in the markets? Well, in a nutshell, producer price index, a lot of the inflation figures came out today. I'll put it in English for you. What the Fed's doing is they're watching inflation. They're watching the growth of the economy. They're watching a lot of factors out there. And the inflation, we aren't even close to the triggers that scare the Fed in regards to, easing rates. So what happens is by easing rates, it makes money cheaper and people borrow and use money and spend money and all that, which drives up prices. So if you bring rates down too low, the thought process is, it's going to make people buy a lot of stuff, charge things, in just cheap money and drive up prices to get out of hand. And that's what happens. But right now, inflation is right in line to what they expect. It's actually, if you look at it, inflation comes in two measures. It comes all commodities, all prices of everything, and then they strip out what they call food and energy. And that's basically, you have to eat and you have to heat your home and do things like that. When you strip out that part of it, basically everything's flat. So the Fed's looking at it saying, well, everything's flat right now. The big uncertainty there is all the tariffs, the Russia situation, the China uncertainty, the Iran uncertainties, all these uncertainties in the world. So they're saying inflation's in line. There's a ton of uncertainty in the world right now. So why don't we keep rates low and even maybe possibly reduce them a little bit to make sure the economy doesn't, get into a hiccup stage and, kind of start going the other way. So my prediction is, and like I said the other day, short term, I was looking for people to lock, and we did that a couple days ago because you saw the market just collapse. But what we're seeing in today's market, and right now the expectation is that the Fed is going to reduce rates. Now you might say, okay, I'm going to wait for that to buy a house, or I'm going to wait on that to refinance my mortgage. Well, hold off. Here's what happens is the Fed comes out and says, we might reduce rates. Well, the market's reacting right then and there on those words. They're not waiting for the day of the rate reduction. So I'm going to explain it this way. The Fed controls the federal funds rate. That is a direct correlation with if you have credit cards, for example. A lot of that is tied to the federal funds rate, which is also a factor of another interest rate. But I'll just make this as generic as I can. When the Fed changes rates up or down, it's going to affect your adjustable rate mortgage and your credit cards. Those are the two big things you're going to be concerned about. Okay? They're not directly affecting mortgage rates. Mortgage rates are tied to what's called a mortgage-backed security. It's a bond that trades. So what happens is, this bond is reacting to the rumors of what's going on, and it'll already be priced in, or its effect will already have been taken place by time the Fed actually reduces rates. So if you have a credit card or a home equity loan, those rates are going to come down a little bit when the Fed makes changes. However, if you're looking for a mortgage now, we monitor this all day, every day to see what is going on in the market with mortgage-backed securities, which is equal to what's mortgage rates doing. What exactly is our mortgage rates doing at the time? And this is what we watch. So if you follow the channel again, we're watching this moving average. What is it doing? And right now, we had a nice little comeback here, and we're expecting now that we just hit a new resistance level that I would not lock in anybody's rate right now. I'm going to wait to see if there's a little ease. But we are always sitting on the sidelines to grab or lock immediately if we see a big move up or down. So hopefully that makes sense to you. But if you follow on a daily basis, you'll get the gist of what we're doing here. And I hope this keeps you informed on what's going on. If you're a mortgage company, this might be a good training tool for your loan officers and what they should watch. If you're a realtor, great benefit to you to watch this as well as my channel on programs that your clients may qualify for, down payment programs, a whole bunch of programs out there. If you're a home buyer or potential home buyer or a homeowner, this is right in your wheelhouse as well. You can take advantage of refinancing, paying off home equity loans, paying off credit cards, a whole bunch of things, and time it right. But use me to time this right for you. Mortgage professional, I do this on a daily basis. And a lot of people say, what do you do different than the other guy? This is what I do. This is what I do. I watch the markets for you so we can time it perfectly. So hopefully, again, you find this information informative. If you do, please give me a thumbs up. Don't forget to subscribe down below. If you want to reach me personally, you can call 844-775-LOAN. Or you can reach me at dfrio, which is Frio, at parksidelending.com. Or check out my website too. It's themortgageupdate.net. So remember, themortgageupdate.net. God bless. Hope you liked the video, and I'll be talking to you next week. See ya.